Hey, what's up, guys? Welcome back to another webinar. Today, we're going to be talking about a trading plan. You guys need to make sure that you have solid risk management, which was in the previous webinar. This one is going to be all about how to make a good trading plan, making sure that you're taking all the lessons from the previous webinars and really being able to apply it, and the thought process that you need to have behind, in each individual day, but then also how to form a plan for a long-term and short-term goals. And we're going to dive into exactly what I mean about that. So, developing a trading plan for small cap short sellers. Welcome to our webinar on developing a trading plan for small cap short sellers. A well-structured trading plan is essential for success in the stock market, especially when navigating the complex world of small caps. This plan will guide you through the process of defining your trading style, realistic goals, financial goals, and managing risk effectively. It's going to be really kind of taking all the key things from the other previous webinars and kind of bringing it together full circle. So, the importance of a trading plan. What you need is to once you have your trading plan identified, you know what your entry will be, your risk will be, your targets. Then you need to have the discipline to follow that. A trading plan provides a structured approach, reducing impulse decisions and emotional trading. The last thing you want to do when you start trading, especially as a beginner, it's going to be very difficult for you guys to control your emotions, which is why I highly recommend using much smaller size, which ties into the risk management. But you need to have very, very disciplined trading. I'm only going to trade, a stock that has more than 5 million float, below 30% institutional ownership, and short float. It is not a recent IPO. It has daily levels to risk off of. Doesn't have SSR, all that kind of stuff. But then you need to have the discipline to follow that day in and day out, because there's going to be certain times where the market is dead, and that's really going to start trying your patience. But you really need to have the skill of just sitting on the sidelines and being okay with that. And that's a lot easier said than done. But risk management, it outlines your risk tolerance and helps you establish clear entry and exit points, limiting potential losses. That was the previous webinar, but that really ties into every single aspect of the trading plan. Your goal alignment. Your trading plan should align with your financial objectives, ensuring your trading strategy is consistent with your goals. And for me, how I go about structuring that is depending on what level of trader you are, how I structure the trading plan, in my free community, that's for people that have absolutely zero knowledge about trading at all. For me, the whole goal is to get to where you are profitable on a demo account, and get ready to transition into actually trading your hard-earned money. Okay, well, once that happens, then you really need to kind of have a step back and be like, okay, well, logically, what do I want this to be? Do I want this to be a side hustle where you can make a little bit extra money? Like you could go on a trip every year. You could use it to fund more retirement or pay down debt or whatever it might be. Whatever your goal is, you need to have steps, little milestones, because that's going to help you keep your discipline. When you start seeing, oh wow, yeah, dude, I'm only making $100 a day, but that compounding up over and over and over, that's actually letting me achieve my goals. And that's how you have the discipline to follow it, and you follow your risk management, which allows you to, like I said, align all your goals. Enhance performance. By following a well-defined plan, you can improve your consistency, increase your profitability, and achieve positive returns. It really does not take a lot of money to start compounding up. The biggest problem that beginners have is they want instant gratification. They want to go from 0 to a million right now with very, very little investment, very, very little time put into trading, and that's not how it works. You need to have a structured plan that you know, tells you exactly where your entry is, your risk is, your targets are, consistency, the discipline to follow that consistency, and maintain your risk management. Like I said, it's a very complex game, but it's totally doable. Key components of an effective trading plan. Well, first off, what kind of style are you? I'm going to show a couple different examples of trading styles in here. I am more of a position trader. There's a lot of people that do scalping, and I actually have a buddy of mine that really he trades exactly on the opposite side of it of things. He longs it or he buys the stock, and he does very good with that. But you need to figure out what is your style, what catches your eye, and what are you better at managing your risk, and all that stuff really ties together. Your risk tolerance. Determine your ability and willingness to accept losses. If you can't accept $100 loss, okay, then don't risk $100 per trade. If you can risk $50, perfect, go for that. If you can't risk $50, honestly, in my personal opinion, you should be doing demo account, because once you give yourself enough confidence where you can start seeing, yeah, it's not real money, but if you can get yourself to where you can consistently be profitable on a demo account, that confidence is going to carry over into your live account. Especially if you can really kind of find a life balance to where you can, well, put aside enough money to where you give yourself a fighting chance. And then you manage that money properly, your emotions, your discipline, your risk, all that stuff. And that's going to really allow you to find success. Financial goals. Set realistic financial goals for your trading, such as targets, returns, and desired profit levels. Like I'm always saying, if you start off with risking $50, realistically, you should be at least making $100. And so for me, do that for a little while. Okay, if you start out with say you're above PDT, you're in America, you're above PDT, you have $2,000 to go into your account. Okay, cool. For me, your first goal should be get that $2,000 to $3,000. All right, hey, maybe wire out $150. Take your wife out or your husband out to dinner. Go and celebrate. Show yourself that that's real money. Because it's so many times that people will spend years trading stocks, they never wire out any money. For them, it's easy to risk it because for them, it's not real. But once you wire that out, and you're like, oh wow, dude, I'm really doing a job. That really changes things in your mind. And for me, I think that having little tiny goals, little milestones, is a huge process, and it's going to help you out in the long term. And entry and exit strategies. Develop clear rules for entering and exit trading based on predetermined criteria. What that means is, okay, this is the zone that needs to be in. If it doesn't get in the zone, I don't trade. I don't care. If I miss a trade, it doesn't matter. If it does get into that zone, cool. That means I have a possible trade. Now, does it react the correct way in that zone? If it does, cool. Take the trade. What is your predetermined risk? How many shares should you go in with? All this stuff needs to be planned out ahead of time, because if you don't plan it out ahead of time, that allows for your emotions to get away from you, and you really start making bad decisions. And it just it's a snowball effect. Defining your trading style and risk tolerance. Trading styles. Identify, are you short term? Most small cap short sellers are going to be short term. Everything's going to be very, very quick in and out of the market. I'm a position trader, so what I try to do is I try to get it at the top of the move, and then really, I will hold that thing all day long. I don't like to trade and hold into after hours or till the next day. That's just not my preference. But some people, depending on how far the stock is up, they will swing that, which means that they will hold it short overnight as long as the risk is, in order. Are you doing like long-term investing, prioritizing long-term growth? It's not really going to tie into short selling, but you need to figure out, where you are in your trading. At the very beginning, you should just be focused on very, very small minimum growth and just compounding that. Boom, 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 boom. Get to a good level to where it's like, oh, now I'm making, a decent amount of money, and I can really see, the I don't know, me going to my main goals. Your risk tolerance, always keeping that in order, making sure that you set realistic goals. You don't want to go in and you're like, oh, hey, it's my first day trading. I got all the money in the world. I'm going to risk $1,000 on a trade. Yeah, you're gonna freak out. Your emotions are gonna get, completely haywire. You need to have very, very realistic and small goals at the very beginning. Make sure that you can manage that before you, like I said, don't go 0 to 100. That's the biggest mistake that you can possibly do. Personal factors. Consider your financial resources, time commitment, which is a huge thing. I made sure that, well, when I stopped trading full time, that was one thing that I did not calculate in, was relying on trading to pay my mortgage, my car insurance, my health insurance, food, groceries, all that stuff. It was so stressful. It was so stressful. And so for me, one thing that I did was, okay, well, I need to make sure that I can find a job that pays all the bills, that I can do things. And luckily, pretty much my older brother hit me up and gave me a job offer, and so I was like, all right, dude, I'm in. And so I came back working with them, and it allows me to take a lot of stress off myself and make sure that my finances are in order to where I have plenty of money to cover all my bills. I have enough money to invest, and I also have the time set aside to where, okay, hey man, get your stuff done, and then you have, say, for me, in my style, it fits perfectly because I only need about 30 minutes. 30 minutes after the open, most of the time, my setup is going to set up within the first 30 minutes. All right, cool, man. Take my trade. All I need to do for me personally is I need to wait for my first target to get hit. The second that hits, I set range orders and I leave it alone. And then I just let the trade either work or I have a base hit for the day. And that's how I formed my own style and figured out. Then overall investment goals, for me, when I first started, I was all like, oh man, dude, I want to buy a mansion. I want to buy a Lamborghini. I want to do all this crazy stuff. And I was trying to keep up with the Joneses. And then once I had, I almost hit I did hit rock bottom. And it was because I was over leveraging myself and it was unrealistic goals. And I realized, oh, I'm getting in trouble because I'm trying to keep up with the Joneses. If I live in a normal house, which I do now, I drive normal cars. They're nice cars, reliable cars, but they're not Lamborghinis, But if I can do that, I can pay off all my credit card debt, pay off all my cars. All I have is a mortgage. Once I pay off the mortgage, it's like, oh man, now I have financial freedom. For me, that is what my investment goals are, and it's very, very achievable with the stock market. And so you just need to kind of come back and have a soul searching and be like, hey, what do I really want from trading, and how do I achieve that? Because I really do believe that anybody can achieve whatever goal they want. You just have to have a structured plan and make it realistic. And even if your plan is to have a mansion and Lamborghinis, that's still achievable. There's nothing wrong with that. But make sure that you give yourself a realistic timeline and have, in my personal opinion, have a lot of milestones leading up to that so that you can keep yourself disciplined to follow on that. And that's one of the biggest things for me. It doesn't matter if you're trading stocks, you're doing, you're trying to lose weight or gain muscle or whatever it is. You need to make sure that you have milestones along the way so you can check yourself for personal growth, and you can it's a celebration. It's like, hell yeah, dude, you're trying to lose weight or you're trying to trade stocks. Okay, cool, man. I had my first all green week. Holy shit! All right, dude. Yeah, go have. I remember the first time I had my first green month. I went out and I took my best friends at the time, and we went and had a pizza party, and that was one of the coolest trading experiences of my life because I was like, holy shit, dude! Like I'm actually doing it. And then I went and bought a brand new house. I moved, and I was so happy. But then the market changed, and I didn't have enough experience to know how to handle that kind of stress. And that's where I was like, oh, I don't think I'm ready to rely on just trading. I think that I did things a little bit wrong, and so I took a huge step back. I went back and looked at my personal stuff. I was just like, hey, how do I fix this problem? Because what I'm doing is not correct. And if I keep on trying to do the same thing, expecting different results, that's crazy. So I need to do something different. And so what I did is I stopped doing all that stuff. I went and got a way cheaper lifestyle. I started paying off my credit card debts, got all my loans covered, got my cars paid for, and then it's like, oh, well, that's crazy. Now I can breathe. That's nice. That's a plus. And I feel like a lot of people could learn from that a little bit. Don't try to keep up with the Joneses. So this is a couple of different trading styles. So this is actually the same guy, right? But this is why you need to have a very, very clear cut trading plan, because how I trade and how I teach my students is to do this. So if I'm risking pre-market high, this is how he should have been trading this particular setup. Okay, he takes a trade here. Well, he let himself get shook out. He's too worried about price action, and he's not just trading the plan. Because if he would have traded the plan, he would have taken a trade, risked over here. It starts going down, and you start seeing a curl. Okay, dude, you can cut it before it gets all the way up here. Like, you can see the pattern, the cup pattern, forming off of, I think this green line's the VWAP. Yeah, it's the VWAP. So yeah, it went down, a fake breakdown on the VWAP, it curls back up. Yeah, if you have enough experience to see that it's forming a cup, yeah, you don't need to keep that risk on, but, short, cover, short, cover, short, cover, short. Like, he's all over the damn place. And so for me, unless it gives you a clear indication to get out, don't get out. Okay, this is a clear indication. Yeah, okay. This is valid. Get out there 100%. But then why'd you get right back in? Because it popped up and stuff down, but then he gets right back out. He's freaking out. Okay, dude. Like, for me, it popped to the level. That's not how I trade, and that's not how I teach to trade. It has to plop through the level. Just like this one, it popped through the level, slammed back down, took a beautiful trade. But then he also messed up, because once you cover half, your stop goes to break even, and then you hold it. And this could have faded forever, and that's going to be like another. This was one of his main problems, is he would take beautiful trades when he was, calm. He would take a trade. Once again, this trade is in pre-market. I don't recommend this for beginners, but just imagine that this is at the open. This is how you should go about doing it. Depending on what this level was, this is clearly the clear level to risk off of. Okay, cool, man. Great. So you take a trade here, which is on backside. It stuffed out, came down, couldn't pop over. Yeah, I'm completely fine with that trade. I have no problem with that trade whatsoever. Okay, so he's risking 259. He got in at like 249. That's 10 cents. Say he's risking $100. Perfect, dude. Take 1,000 shares. No problem. There's 1,000 shares. Cover down here, half. That's $2 from almost 250. That is $500 right there. And the problem is he just jumped out everything. But that's the crazy thing. If you still had 500 shares, you covered half at $2. The rest is break even. Okay, you already made $500 on that day. You're playing with house money. The difference is, okay, this goes down. Like, this looks like a good level to cover. He doesn't have my targets on here, but okay, so say you cover another half down here. That's another 20 cents below. Cool. Like, you could trail this thing. Look how far this thing fades down to $1.40. $1, that's another dollar. Like, obviously, like, it's not going to be realistic, but if he did hold all the way down here, that's another $500. That's insane. Like, he just made he could have made over $1,000, but instead he got FOMO. There's FOMO on the entries, there's FOMO on the targets, and that's what you need to have a very, very clear defined plan. This is my entry, this is my targets, these are my risks. And that's how you keep yourself from falling out of the right rules. Then you need to set realistic financial goals. You need to have short-term goals. Set achievable goals for the next few months or quarters. These can be very specific targets for profit or a desired level of capital appreciation. Like I'm always telling my students, for me, one of the biggest mistakes that beginner traders do is they get into trading wanting to make quick money. This is a business. So when you get into a business, you need to make sure that, you have like a padding, like savings. So for me, the best structure, I'm not going to go into super detail because it's not a one-on-one coaching thing, but like, you need to have some sort of generic plan. Okay, I have X amount of money. I need to have X amount of money in a savings account. Then I need to grow my main account to X amount of money, because you want to give yourself padding and make sure that you're not stressed out. Not every day you're in here, oh my gosh, I got to trade it. Like, no, you want to show up to the market and be like, I always want to trade. Every day I'm like, yeah, I'm hoping that something set up for me to trade. If it doesn't, I don't care at all. I'm completely fine with, I don't know. There's been times where, I have not taken a trade in like 2 weeks. Why? Because there wasn't anything that was worth my time. There wasn't anything that was worth my risk. So I don't take it. And you need to have those kind of goals and have realistic goals. That's why I say that, at the very beginning, like the first thing to do is make sure that you have a green month. Well, like even before that, really, like once you go live, okay, get to where you made money in 1 week. You're green for a whole week. That should be your number one milestone. I know there might be people that are watching this like, dude, that's such a easy goal. Okay, that's great. Good for you. You already passed the first milestone. Awesome. Now go 2 weeks. Cool. You made 2 weeks where you're making money. Great. Now your first month. That for me, you going green for your first month. Like I said, what I did on the first time I ever had a green month is I took some money out. I went and had a big ass pizza party. I had a blast. It was my brother and my best friends, and we ate a bunch of pizza and we just hung out and drank some bourbon, and it's like a little celebration. And really, I feel like that's what you should do. You should pat yourself on the back because you're making money, and whatever anybody thinks, you are already doing better than like 90% of traders on the planet. You're making money. That's great, dude. You should go give yourself a pat on the back. Does that mean that you're gonna don't let your ego go out of control? You're not gonna be a millionaire next month, but that's a good goal. And then it's like, okay, man, now get it to where you're profitable for a quarter. Okay, cool. Now we're on to something. Okay, depending on how much capital you've been able to allocate, make sure that you're sizing up incrementally. That way you can start capitalizing a little bit more on your trading and just start slowly compounding up. Don't go from, all right, hey man, I had my first month, I'm gonna double my size. Like, that's probably not a good idea. You need to slowly build things up. It's kind of like getting in shape or getting I use kickboxing a lot because I used to do fighting. But that'd almost be like somebody coming in and doing good in sparring for with the beginners, and then wanting to jump in with the fighters. That's not a good idea. Like, you need to have little baby steps in the right direction. Then once you can start finding yourself, okay, hey man, cool. I have your short term leads into your long term. Okay, well, what is your long term goal? Do you want to do this? Could you see yourself doing this job long term for the rest of your life? And really, that's the thing that really kind of made it concrete in my mind. Is me and my wife were talking. She's like, what would you do if we ever won the lottery one day? I know that's a stupid conversation to have. It's probably never gonna happen, but I mean, it's never gonna happen for me. The only person that buys lottery tickets is my wife. So, but if I did, I would trade stocks every single day, because for me, it's not about the money. It's about the challenge. It's the funnest game I've ever done in my life. I can do it for the rest of my life, and it helps you understand who you are. And I love that. And so for me, that made me, I don't know, it really did. It changed my goals. And I was like, well, okay, well, if I know I want to trade stocks for the rest of my life, I'm not in a rush. But what do I want trading? What kind of lifestyle do I want because of trading? For me, my goals currently, for those watching, is I want to be completely out of debt. I mean, everything. I want to be out of credit card debt. Well, I'm already out of credit card debt. I don't own any, or I don't have any loans. I don't owe anything on any of my cars. So for me, I'm already, because of those short-term goals. Those short-term goals were like, hey, I want to knock out this credit card. Now I want to knock out this loan. Now, hey, you know what? I just got into a car wreck. I got into a car wreck 6 months ago. I had to buy a brand new car. I was not expecting that. I did not want another car payment. And then I was just like, you know what? I'm gonna pay off my car. Okay, so I pay off my car. There's one of the goals. My wife had a nice car. Okay, pay off her car. Now it's like, oh, what about my house? I should pay off my house. Then eventually I want to buy a house in Colombia because that's where my wife is from. I want to go buy a luxury apartment in Colombia. Okay, then I want to pay that off. And you start building this stuff up. For me personally, I'm not going to put anything into retirement. I have zero plans of ever retiring. This is my retirement. And so for me, that's my goals. You need to sit back and be like, hey, what's the life that you want to have, and how do you achieve it? And then set goals, short-term, long-term goals, and make sure that each one of them build it up. But like I said, I would keep milestones along the way. It's going to make you, I don't know, be determined. So you start here, right? This is one of the biggest problems that I feel like a lot of beginner traders have, is they start at zero and they think that they're going to somehow magically end up all the way over here. And it's like, yeah, that's not how it works, man. Like, this is how it works. This is really how it works, because you come in and you're like, you have no idea, like you're losing a little bit of money, and then you're like, you get frustrated, and you use a little bit too much size, and you're like, oh shit, oh shit, oh shit, oh, and then you catch yourself, you start doing a little bit good, oh, all right, hey, I'm gonna start using a little bit more size, oh, bam, and then it drops back down, and then bam, it drops back down, and it just keeps on going, and going, and all of a sudden, your come to Jesus moment happens, and it's like, boom. Okay, yeah, you failed a little bit, but then it's like, hey, in the long run, you are still not breaking this structure. Then you catch yourself. You start going back up. Now that's the low. Okay, you have a little pullback. Not a big deal. You catch yourself. Now that's a low. Going up. Now that's the low. Going up. Pulls back a little bit. All right, that's fine. That's fine. Size down a little bit. Make sure that you're getting back in line with the market. Okay, dude, no problem. Now that's the low. Start pulling up. Now that's the low. This for me is a big, this is a big milestone. Why? Because you were just $50,000 in the hole. Well, more than 50 is like $65,000 in the hole here. You just gained back, and you're down still, but you just made huge progress. Well, what does that do to you? Like I said, milestones are really freaking important, because the second that you figure that out in your head, you're like, oh man, dude, you can see the light at the end of the tunnel. And on top of that, the other huge thing is you've had 2 years of experience, and you're like, you know what, dude, I got this shit. And the second, boom, you just freaking set off like a freaking freight train, and ta-da, you are back to break even. And now you're building it up, and then you take off, a little pullback, and then you just take off like a freight train. And now it's like, oh, okay, I'm on to something. I've literally cracked the matrix. And once you start doing that, it's, I don't know, you just, sky's the limit, really. I mean, like, what do you want at that point? And like I said, you start thinking in very, very, like, not trying to keep up with the Joneses kind of BS. Okay, so say you have some credit card debt. You have some loans. That just paid off the credit card debt and the loans. Okay, well, you got a car payment. That just paid off card number 1. That just paid off card number 2. Okay, well, shit. Now you're working on the house. And once you start paying off the house, it's like, oh, yeah, dude, you're financially free. You don't have to go to work. Yeah, you still have a 9-to-5 job. Who cares? You're working with family. You're having a good time. You don't need to quit. Why? It pays for all your bills. And now you don't have any bills. You don't have any debt. You don't have any car payments. You don't have a house payment. Well, hell, you don't have a house payment. They match your 401k, and you still got vacation time. Okay, dude, go on a vacation. Who gives a shit? Now all that extra money, now you go have a badass vacation. I just had the coolest vacation of my entire life this last year. I went to Rome and Greece, and it was the coolest thing ever. I would love to do that again. And I don't know, go to Tokyo, go to Australia. I have a student that's down in Australia. How cool would that be to go down and meet my student in Australia? That'd be awesome. I got students all over Europe. Hey, dude, I'm gonna come to your city. Let's I'll go rent a place. Let's meet up. Let's trade together live. Okay, that's awesome. You know, like, whatever your goal is, you need to just figure it out and implement it. Then, like, once again, this is the most important stuff. This is, like, literally the bread and butter. You need to have your entry on point. Define clear entry points. What has to happen? Do you trade off the indicators? Is it daily levels? Is it fibs? Is it, like, what is it, a combination of everything? What is it? What shows you that your exit needs to be at this level? What is, I don't know, your style? What would make sense? If you're a scalper, it might just be like a 2 or 3 cent risk. You know, it might be, if you're a position trader, okay, key level, whatever it is. And then make sure that you are sizing in accordingly. That way you don't just get yourself all diced up and get your ass kicked. This is an example of how I make my students do stuff. This is one of my old trades I took. and I analyzed it for one of my students. I was like, hey, dude, this is what you should be doing. And going off of the example of risking $100, so if you take a trade right here, which is a very valid trade for my community, okay, cool. You're risking this red line. So since you're risking 15 cents, if you're risking $100 on the trade, you take 660 shares right here. Cool, dude. You just covered half at the first target. Now you have 330 shares done right there. So 330 shares, that is like it's like a 50-cent move. So that's what, 170 something dollars or something like that. In just that move, and all you're doing is risking $100. Okay, so you have almost a 2-hour trade, and you're only halfway out of your trade. But then it goes up, stops you at break even. Okay, that wasn't the best trade in the world. Then it comes up, pops out. This is another setup that I trade, and the risk should be right up here, which is 5 cents. Well, if you're risking 5 cents, that's 2,000 shares. You take a trade right here, risking over that. Okay, you cover. Yeah, you don't care about all this price action. Okay, this starts coming up. All right, like I said before, if this curls like this, yeah, okay, dude, stop break even. That's 2,000 shares. You have to adapt to the share size. You know, like I would not be covering down here. I'd be really, really close to where I am because 2,000 shares, doesn't need to make a big move for you to lose a decent amount of money. But comes down here, you just covered 1,000 shares. You took a trade at 240. You covered at about $2. Yeah, about $2. That's $400. You just made $400 plus $175. You just made $575. And you're risking $100 here. You made $175. Cool. Comes up break even. Okay, you're risking $100 here again. Didn't happen. Okay, cool. You just made $500. That is a 5-hour trade or a 5-hour day. Then it goes up, stops you at break even. Okay, dude, leave it alone. It's playing games. Okay, this thing should have just faded down. It didn't go up a lot. So I mean, really, like, what do you expect from this thing? You know, like realistically, like honestly, for me, this, if you were risking $100, if it was not up this far, I don't know, maybe take half size, whatever. But you need to figure out your game plan. But what I'm trying to show you with this is how achievable these goals are. And when people they just don't understand how the game works and how to go about it the right way. And this is how you need to do it. This is the job that I make my students do. And when you are in the free community, I show you this kind of stuff, examples. Okay, cool. Go do that work. Now you upgrade into my subscription. Okay, hey guys, I'm going to do the work and you guys can follow along with me. Okay, cool. You guys don't do any of the tracking or whatever, no problem. My students, though, I make them do this. They need to do this on a weekly basis. Then on a monthly basis, we go back and review all this stuff. And that's how you do the job of trading. On top of that, you need to make sure that you're managing your emotions and avoiding biases. Yes, in small caps, 90% of the stocks go down. Does that mean that you just take a trade and, oh, it's going to go down, it's going to go down? No, it does not mean that at all. It's all about timing. You also need to have emotional control. You need to look at, on top of tracking your stats, you should also be journaling. And, recognize certain things. Like for me, if I see a stock that has a lot of range, I know that one of my triggers is I will start daydreaming about how much money I can make if my final target hits. If I even think that, I cut my size in half. Why? Because over the years, that's been something that really affects me. If I don't respect my risk 100% on the first trade, it doesn't matter if it's the first or the second trade, if I do not follow my risk on any of my trades, I cut my size in half. Because that is a indication that I am starting to break rules, and that is a recipe for disaster. That goes along with mindfulness. You need to be able to feel yourself. This is how I trade. How I'm talking to you guys. I'm very relaxed. I'm very calm. But when I was beginning trading, I used to record myself, and there'd be times I'd be over here like, oh my gosh, like literally like a crackhead. I start feeling myself like getting like tensed up or like super like anxiety. Nah, dude, like that might be like an indication. Okay, I need to either size down or like really, maybe I just need to take the day off because something's not right. Am I not sleeping enough? Am I somebody pissed me off and like I'm emotional about something, or am I stressed about something? Whatever it is, but then have the discipline to execute your plan. Not only your trading plan, but like that. Hey, I'm recognizing this feeling. I know what happens when I let this feeling take control. So I need to get away from this, and that comes from experience in mindfulness. This is a trade that a friend of mine took a long time ago, and first off, he's just straight gambling because this thing is not trading with any volume. You don't want to be trading anything like this. Nothing. I don't care. Yeah, this is a higher price stock. Whatever. It does not matter. You do not trade anything that's trading like this because you're gonna get your face ripped off. And then I remember in the post he was talking about how he got stuck in this thing, and yeah, of course you got stuck in this thing, dude. You start trading, like, you can't trade with any size at all. This thing, like, it's not trading on any volume. In this whole candle right here, it went from $7.25 to $8.65, trading on a little over 35,000 shares. Dude, there's no, like, this has to be just, I don't know, this is just stupid. Do you short here? Like, it's just, there's no plan, there's no structure. This is just straight gambling and just craziness, absolute craziness. This is what can also happen if you don't follow your plan. So first off, if this is one of my students, the first thing I would say is, what the hell, dude? Like, 15 grand in one day, 16 grand in one day? Are you out of your damn mind? Remember in the last one where I say you need to have a max loss on because it's like your seatbelt? This dude did not have a seatbelt. This guy went absolutely apeshit. And what I'm trying to tell you guys is you need to be controlled. On top of that, this guy is trading with 10,000 shares, 4,000 shares, 5,000, 4,000, 5,000, 5,000, 4,000, 1,000. Oh, wow, dude. Congratulations. You actually dropped down to 1,000 shares. Realistically, if this dude let this thing happen, he should not be trading with anything. Like, he should not be trading with even 1,000 shares. What the hell is he trading with 10,000 shares for? That is just crazy. On top of that, if you look over here, short, long, short, long, short, short, long, short. He has no idea. He's so emotional that he's flipping all over the damn place. And I would imagine it's from this one trade. He went in way too much size, and he took a short at $4.38. He closed out that position at $5.19. So that's where there's no plan. Why would you risk almost $1 on 10,000 shares? Okay, dude, like, you got $1 million account. Congratulations. It doesn't matter if you have $1 million account or whatever this guy's account size is. You don't ever do that. Okay, so you're risking, $1. Okay, say he's risking a little over $5, and he has no self control to get in at $4.38. Dude, you need to you need to go work on your mental side of things, or like size down. Like, I know some people that have really bad FOMO, and okay, dude, like say you have an ungodly amount of money and you can risk, say your max loss is say $1,000 on a day. It's not unheard of. I know a lot of people that have way more than $1,000 max loss. Okay, dude, go in with 100 shares. You're okay. Yeah, you're not gonna make any money really, but I mean, that is a way that I know of some people dealing with their emotions. But then it's like, then he instantly goes, long. Okay, well, this thing just ripped me up. It went down to 472. Now I'm going to go long, but then I'm also going to have a 40-cent risk. It's like, so his entry, and these are almost identical. Like, he's got no plan whatsoever. Like, this is what happens when you have no plan and your emotions get ahead of you. And why I said on the previous webinar that you need to make sure that your position size is correctly. Because if you don't position in correctly, it allows for your emotions to just go absolutely haywire. So, reviewing and refining your training plan. Frequency. Like, what I recommend is every single day you come home and the first thing I do when I get home is I review my trades. And then I go back over my students. I do a video like this. I tell them what they need to work on, how to improve, and yeah, we do that. Then every single week we do the same thing. All right, hey dude, like, what were your trades this week? Then we review it. We touch. Okay, hey, I'm noticing this pattern. I'm noticing this target's not getting hit anymore. I'm noticing these kind of things are giving really good entries. All that kind of stuff. And then you do that again every month. You review all your trades, all your stats. Okay, well, what was your goal for the month? I just wanted to, end with a profit on the month. Okay, well, how was your month? I was just a little shy of my being profitable for the month. Okay, well, what did your stats show you? My average winner and my average loser are about the same thing. Okay, well, what's your win percentage? Oh, it's not that great. Okay, well, you start digging and you be a detective. Like, is there some sort of habit that is holding you back? If something happens one time, that might be just an outlier. 2 times, possibly even an outlier. Happens 3 times, that's a habit. Okay, well, what is that, and how is that holding you back? And if you cut that out, what do your numbers look like then? That's what you need to be doing. That's your analysis on your performance. You need to evaluate your trading performance and identify areas for improvement or things that you just need to cut out completely that would just drastically change the results. Market conditions. That's another thing. Like, when I first started trading, the first time I started trading short, that was right before COVID. I was making an ungodly amount of money, and then COVID happened, and the market shifted. Everyone was buying stuff. These stocks were just going crazy volume. If you weren't doing this job, you'd just be sitting back like, I don't get it. I was making so much money. Now I'm just losing money. Well, dude, I don't know. Like, identify what's going on. How, like, why are you losing money, and figure out the problem. Personal goals. Ensure your trading plans align with your evolving financial goals. Like I said, at the very beginning, you have like little milestones. Okay, you're green for a week, then 2 weeks, then a month, then 2 months. You're green for a whole quarter. Holy shit, dude. All right, dude. Like, maybe you're onto something. Let's add a little bit more size. When you add a little bit more size, how does your emotions react? Do you still have the discipline? Are you still having the same stats? Or did it mess with your head? If it messed with your head, you're not ready for it yet. Then we need to go back to the previous one and keep building on that. That's fine. It's just going to take a little bit longer, get a little bit more experience, a little bit bigger cushion. Now we size up. All right, the second time when you size up, does that get better? Like, you start going in more detail, and that's something that I do with my mentoring students, but you get the idea. You can learn everything you need to do the job from these beginner webinars. So, but that is really what you need to be doing. Once again, I really hope that you guys found a lot of value in this. I'm really trying to give as much value as I possibly can. If there's anything, once again, if you guys need anything at all, just I don't know, comment down below or shoot me a message or whatever. And I would be more than happy to help you guys out. I truly do want to give back. And there's so many people at the very beginning of my trading career that told me, oh, dude, you're just gambling. 99% of people never succeed. And it's like, yeah, you get that stuff stuck in your head, and it's like a cancer. It just spreads to every aspect of your life. And I truly do believe that people can achieve this. I believe that everybody in the world could do this. Really, it just it takes time to understand you and your emotions, how to trade correctly to align with your emotions, and I don't know, not even just your emotions, but like how much money do you have? Your risk tolerance, all that kind of stuff is a huge factor in all this. But I do truly believe that everybody can achieve this. And just because you see these guys driving around with Lamborghinis and mansions and stuff, if you made really like I use this all the time for my students because they cry and stuff when they only make a couple $100. If you make $100 a day, you're going to be averaging $25,000 a year. $100 a day. That is ridiculously easy to make once you have a little bit of understanding of the market. That's really all you need. Could you imagine what would your life be like? I mean, obviously, yeah, you got to pay taxes, all that stuff, but like, really, it's a game. If you could play a game and make $25,000 extra dollars that you never had before, would you be crying about it? No? Alright, well, how hard is it to make $100? With the example I used earlier today, if you're risking $100 in that particular one trade, if you did that correctly, you managed your emotions, you had the right structured plan, you followed my plan, you would have made $500. Well, if you follow that, I can't remember what the numbers are, but $500 is like, I want to say it is over $100,000. That's crazy, life-changing money. Even if your goal is $100, just stay in your lane. Don't be chasing. The biggest downfall that I see people fall into is they get their ego way too big, or they get super, super greedy. If you can keep that balanced, then really the sky's the limit. Because imagine if, okay, say you're in, $40,000 of debt or whatever. I mean, with the country's consumer debt over $1 trillion, I would imagine there's probably a lot of people watching this that are probably in more than $40,000 of debt. Okay, well, go get a second job. Go and make some money and invest it in the stock market. Invest it in yourself. And give yourself the time to where you can start consistently making an average of $100. Okay, cool. I mean, that one trade, imagine if that was the only valid trade of that week. Okay, well, that's the only trade you took. You still made $500. That still means you're averaging $100 a day. That's 25 grand. Yeah, you're going to have to pay taxes on it, whatever, but that's still going to be a big chunk of money that you could throw completely to your debt. And you do that for a little while, and you be consistent. You be disciplined. You have a structure. You can absolutely change your life. And for me, I really do believe that trading stocks is, I don't know, it's really one of the only ways you can build actual wealth. You got to either get into the stock market, you got to get into real estate where you have to build your own business. And really, each one of those things is its own business. If you get into real estate and you're just like, oh yeah, I buy houses. No, you have a real estate business. That is your business. You open up, a restaurant or a gym or whatever. Okay, yeah, that really is a business. That's another form of business. This is a business. You need to learn how the business works. This is a game, so you need to learn how the game works and then capitalize on it. And once you crack the code, it really is. It's almost like printing money. As long as you can keep your brain in check and be disciplined, really, it'll change your life. I truly believe that. And so, if you guys have any questions, if I can help you out at all, Let me know in the comments, but I will see you guys on the next one. Later.